Welcome to the Mirae Asset Sharekhan quarterly sector review. Today, we will talk about Q3FY2026 performance of NBFC, insurance, AMCs, and diversified financials. Q3 performance was resilient on festive demand, uptick in rural activities, favorable monsoon, and GST rate cuts. Also, better margin performance across lending segment except specific segments. Let's start with the overall picture. NBFC saw healthy business momentum with the vehicle and gold financials lending growth on festive demand, rural sentiment, improved and higher volumes on GST cut specific for vehicle financial segment. The insurance sector benefited from GST rationalisation, resulting in better traction of term life and retail health products. AMCs rode on equity participation and ETF inflows. Others, especially BSE, saw good momentum in core trading activities leading to healthy revenues. NBFC delivered a steady quarter with vehicle finance driving momentum. Vehicle finance portfolio expanded by over 17% year-on-year, driven by GST cuts, festive demand, and a strong rural economy. Gold financial saw a robust growth on sharp rise in gold prices. Among individual players, Hudco reported 30.9% AUM growth, Aditya Birla Capital grew 30.3%, SBFC rose 28.6%, and Bajaj Finance grew 21.7%. Meanwhile, housing financiers like LIC Housing Finance grew just 5.1%, affected by higher balance transfers and competition. NBFC margins and asset quality. Margins saw divergence across the board. Vehicle financiers saw a meaningful pickup in their net interest margin, expanded by 30 bps year-on-year, held by fixed rate loan portfolio. On a company-specific improvement, CIFC, Chola Investment and Finance, Canfin, MMF, and PFC also reported NIM expansion, stronger spreads. But others faced pressure, like Hudco's margin fell by 67 bps, 5 stars by 58 bps, and REC saw a sequential dip. Asset quality saw healthy improvement across the board on improved recoveries and collections. MFI saw continued resilient performance. However, overall credit costs stayed elevated and above estimates, which affected operating profit growth. However, 5 stars asset quality sharply deteriorated with a GNP rising by 54 bps quarter-on-quarter, and Bajaj Finance too faced higher credit cost this quarter. Life insurers held up better than expected this quarter. Margin dipped slightly but far less than anticipated thanks to product tweaks and change in mix. Protection and health grew well after GST cuts made retail products more affordable. Motor insurance also benefited from improved festive auto sales. Max Financial posted a strong quarter with annual premium equivalent growth of 30% and value of new business growth of 35%. ICICI Prudential saw VNB up 19% while HDFC Life delivered 11% APE growth. In general insurance, ICICI Lombard achieved gross direct premium income, that is GDPI, growth of 30.3% ahead of the industry's 11.5% growth. AMCs, a steady AUM and strong ETF inflows. AMCs had a steady quarter supported by rising equity participation. Industry quarterly average assets under management QAAUM rose 5.1% while Nippon AMC saw QAAM rise 7% with a strong ETF inflows. Core revenue for Nippon grew 20% with a PAT up nearly 37%. Diversified financials, BSE remains strong. Other capital markets were led by BSE's standout performance. Revenue grew 62% year-on-year and PAT surged 175% thanks to higher trading volumes and new revenue streams. Coverage universe summary. To sum it up, Q3 delivered a resilient performance across the lending ecosystem. Insurance stayed steady on healthier business mix. AMCs benefited from market participation and diversified financials saw exceptional growth led by BSE. Looking ahead, the outlook remains selective. NBFCs continue to stay in a positive zone with a strong AUM momentum and gradually improving credit costs. We maintain a neutral stance on insurance sector. On AMCs, also we remain neutral with AUM traction tempered market volatility. Diversified financials remain positive as market participation stays strong. Our preferred picks for the quarter are on the NBFC side, Aditya Birla Capital, Chola Investment and Finance, MMFS, and Hudco. In insurance, Max Financials and ICICI Lombard, and from the market-linked names, Nam India. That wraps up the Q3FY2026 review of NBFC Insurance AMCs and Diversified Financials. For daily calls and detailed research report, visit research.sharekhan.com today. If you found this helpful, do like, share and subscribe. We will see you in the next quarterly update. Thank you.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.